Today we're talking about someone that needs to relocate and they want to obtain a mortgage. So say you're wanting to move to a new area and qualify for a mortgage on the new home in the area that you're landing in. This can get tricky for some lenders because it's a complicated process in terms of how we qualify you. But it doesn't have to be complicated and risky if you know what's going on and also your loan officer does as well. So that's why I made this video, to really iron out the steps that it takes to make sure that you're successful in getting approved for a home loan when relocating. So today we're going to talk about someone who's, for example, is moving to a new area, right? I'm in Florida, very popular thing to see people migrating this way and getting new jobs or continuing their current employment as they do so. So here are the different circumstances. Say, for example, a family wants to relocate to a different area and they're able to work from the new area. All right, there's two ways that happens. Either they work from home or they are able to work for a local branch in the new area. So what we have to do as a lender is document that an office, if you work in an office and you're transferring to the new office in this area, or say it's a store or something like that, that it's within a reasonable distance from your new home that we're buying or qualifying you for. If you work from home, obviously you're fine. You can work from the house that you're buying, but we just need to document that you are able to work from home. All right, that might be on your initial job offer letter or an email from a manager, HR, that kind of thing. All right, so those are the two circumstances when someone is moving to a new area and can continue their current employment. But where it gets a little tricky for some is when you're starting a new job. All right, you're leaving your current employment and you're starting a new job. What you need to understand right off the bat is that as lenders, we really don't care as much about how long you've been at your current job. In fact, in this situation, you may not even start your new job before you close on your home. All right, and that's allowed depending on the lender, of course, but that is something that is totally doable. And because, again, here in Florida, I do it all the time. But we have to document it appropriately, and we have to have certain things to make sure we can qualify you. All right, so now you're leaving your current job and you're starting a new job here in Florida, for example, or in your new area. What we have to document is your job offer letter or your job acceptance letter. And that letter needs to detail a few things. It's going to detail when you start your new job, how much you make or how much you will make at your new job. It's going to detail what type of compensation you're going to receive in this new position. Those type of things are very important to an underwriter because we need to be able to see basically how much you're going to be making and when that income is starting. So if you're moving to a new area and you're leaving your job and you're starting a new one and your job doesn't start until 6 months after you move and buy your home, that's not going to work. You're not going to be able to qualify that way. The time that it takes between the time you close and the time you start your job, if it's after you close on your home, matters. All right, so we need to look at that. So reach out to me if you have any questions about that. Say you have a job offer letter right now and you're looking to maybe land into a home versus renting, and you want to kind of map this out and plan it out. That's what I'm here for. Okay, so you've got my cell phone number. You can text me or call me anytime, and I will be glad to look at that for you and see how the dates line up. That's an important thing. All right, so we want that offer letter to show the date that you're starting. The other thing the offer letter has to show is what's going on with your compensation. So are you salaried? Are you hourly? Are you receiving bonus? How much of your income is bonus? Those type of things. Because in many cases, we may not be able to use future bonus income or anything like that because it's variable. It can change. However, unlike those type of incomes, salaried income is very easy to underwrite. It's a fixed amount every year, and you're able to qualify based on that base salary. All right, so overtime, things like that are all extra or gravy, and it's going to be tough for us to approve you for the new home using those future incomes that are variable. So base pay is important, and again, as a lender, we need to be experienced with what we're working on when it comes to relocation loans because certain investors have different rules than others. For example, Freddie Mac and Fannie Mae look at salaried income differently or hourly income differently. And so we've got to make sure that when you tell me your situation, whether it's hourly or salary, for example, that I'm pairing you with the right product that's going to lead to success in you closing on your new home. All right, so these are all important things. So what I want you guys to really understand and remember is that don't assume that you have to be on your job for 30 days, 60 days, 90 days, 6 months, or a year, whatever it is, in order to qualify when you move to your new area. And a lot of people make this mistake and they end up renting way longer than they really want to and need to. So just understand that you really don't even have to start your new job yet if you have that job offer letter. Now this doesn't just apply to someone who is relocating. If you, for example, are a professional locally and you're starting a new job and want to buy a home, same concept applies. It doesn't just apply to those who are relocating. But again, this video is about those who are traveling, are moving to a new area. All right. And so these are the different facets of relocation. Now things get tricky when you own a home and you're selling it and you want to buy a new home. All right. And that's where we really got to focus on the details of the situation. And it's a case-by-case thing. So again, reach out to me if you want me to kind of look at the scenario. Even if it's a far-off plan, you want to get the information up front so you know what to expect. So if you have a home and you're looking to move to a new home in a different area, we may be able to qualify you with both homes. All right. If you're planning on renting it, if you're planning on selling it, those are things that are going to maybe change the way you qualify for your new home. Again, someone may qualify for their old mortgage payment and insurance and taxes and everything, and still qualify for a new home against their debt to income ratio, but some may not. So let's talk about one-on-one what needs to happen in your situation depending on the loan product that you need to use and also depending on your financial circumstances or situation. All right, so you may have someone that wants to rent out their house, right? A lot of people have very low interest rates on their mortgage currently, and they have a lot of equity, and they feel like it's a really good idea to just kind of hold on to that property and rent it out. And you totally can do that and relocate to a new area. So everything I mentioned about relocation still applies. But then when it comes to the rental, depending on the product, depending on the investor that we put you with, we may have to document a lease, okay? Something that shows that you are actually set to rent this thing out when you move out of it, all right? Or within a reasonable time of closing. All right, so we're gonna document that lease and we're gonna use some of that income to help you qualify for your next house. Now, given the situation, okay, we got to look at it one-on-one. For a VA loan, for example, a veteran may be able to, or active military member may be able to transfer over to a new home and turn their old home into a rental property, and we're going to document expected or anticipated rental income just based on the market conditions in the area. All right, so you may not necessarily need a lease in place. Now, if you have an FHA loan on your property right now and you're trying to relocate, and rent out that house and get another loan, even if it's a different type of loan on the next home, it's going to be interesting when you're trying to qualify for a new FHA home or a new FHA loan because you need to have a certain amount of equity in your old home in order to get a second FHA loan, all right? Because typically you only have one, and FHA really doesn't like their product to be used for investments, okay? So we're gonna make sure you have enough equity on your departing residence, 25% to be specific. We've got to do an appraisal on your departing residence on that house that you're leaving, and we have to kind of look at things and see if it's gonna meet the FHA guidelines on relocation, all right? And so conventional, again, if you can qualify for both payments, great. If not, what we're going to do is we're going to look at how much you're going to be bringing in on renting it out. If it's a sale situation, so say in any of these situations you want to sell your home, well, we're going to look and say, okay, can you qualify with both payments? And if not, when is the home selling? So you're going to need to tell us or show us a contract if the home is for sale. And you might have to close on that home right when or right before you buy the new home, all right? Now, if you don't have the money to buy your new home, then you're going to need to sell that home again, and we're gonna need to transfer the money to the new property at closing, all right? So those are the net proceeds going from one property to the next, okay? That's called a simultaneous closing, the same day. It can actually, believe it or not, happen in the same day. It's kind of a, orchestra putting it together, but it is possible, all right? And what happens typically is when you sell your house, in the morning, for example, the money gets wired to the new title company for your purchase, sitting there ready to go, and then your cash to close is taken out of that money at the new title company, and then whatever's left over from the sale of your home is wired to you. That's typically the easiest way to get that done. So again, there's just so many different details, but it can be done. If you have any questions about a relocation situation that you want to buy a house and you need to move to a new area, just reach out to me. Again, you have my cell phone information in the description below. Text me anytime, call me any day of the week. I am available to talk with you. I'd love to plan this out with you guys. I thank you so much for watching. Again, Home Loan Drew here. Follow me, of course, and subscribe for any additional information. Got a great videos coming your way, many already on the channel, and we'll be seeing you guys soon. Take care.